Okay, so I'm here with John Forman. John is going to help us answer some questions that lots of people would need answers to. And John, I will just go straight ahead to the first question. John, if you could tell me, what do you think traditional forex traders think about this thing that has come up for some time now called Bitcoin?
I would venture to say that most traditional traders probably don't give it a heck of a lot of thought right now, for a couple reasons. I mean, first off, it's still in its infancy. There isn't a real developed kind of trading structure around it, which obviously creates all sorts of at least perceived risk. And that there are already enough risky things about being in forex trading, as we've seen by the recent Swiss action and what that did to some of the brokers. So I think for a lot of people, the idea of trying to trade actively what is still essentially a very small market, really, is probably something that gives them quite a bit of pause. And then on the other side of it, there's the question of, well, if you're somebody who is a news trader or likes to think of themselves as a fundamental trader, what exactly are the fundamentals of Bitcoin? What exactly is the news about Bitcoin? You're not getting headlines from the Bitcoin central bank, and that sort of thing. So for at least a fraction of the trading population, there's some challenges to how they would kind of conceptualize trading Bitcoin or any other cryptocurrency for that matter. Now, that said, obviously, if Bitcoin continues to grow or some variation on it gets to the point of being a commonly used currency throughout the world, then that all bets are off. Things will change, and people will speculate on it just like they speculate on everything else. But for right now, I think that's probably a little bit of ways off.
Okay, so if I would ask this, have you ever had any personal interest ever since Bitcoin came up?
No, not myself.
And
I've written about it a little bit, but I haven't used Bitcoin myself.
okay, but does it mean so? I understand that you never traded Bitcoin, and
No,
you have no intention of doing this.
not currently.
Okay, so it's currently fixed on forex markets, exactly, right?
Yeah. For me, if I'm going to trade forex, I'm going to trade in more traditional fashion.
Okay, now talking about forex, this is something that lots of people have. I mean, lots of people know about this. That's a bunch of forex traders actually lose their money. It's around. I mean, there's no, there's forex has no centralized information data source, so it's like everyone is speculating. And from what I've seen, it's like 95. I think more, but I think about 90 to 95% of forex traders are losing money. And I would like to ask, why do you personally think that these bunch of traders are losing money on the forex market?
Okay, let me first provide some real information because actually the PhD work that I'm doing right now is specifically involved with forex traders and their performance. The numbers that we do have that the CFTC in the U.S. requires reporting of are the quarterly profitability rates of the U.S. based brokers, and those are reported every month or every quarter, I should say, and have been for the last several years now. And they basically show that on a quarterly basis, now this isn't monthly or daily or anything like this, but on a quarterly basis, about 30, 35%, so maybe a third of traders are profitable. Now, profitable just means, and these are active traders, by the way, so you must have done at least one trade. Profitable just means greater than zero, so you didn't lose money. So there's a lot of nuance to that, and I've kind of blogged about how those numbers can be deceiving. But those are the one set of numbers so far that we can kind of say, okay, these are official, semi-official, whatever you want to call them. The issue with that, I've done a little bit of work, is the rate at which people are able to sustain that profitability is very low. most people who were profitable in one quarter are not profitable the next quarter, based on some numbers. And as part of my PhD research, which I'm hoping to finish up very soon, I'm putting together ideas to actually kind of write a book that goes into some of these actual figures, because I've got this data set of actual traders and what they've done, and I want to really get some numbers out there. But I think you're really, what it comes down to is you're right in that over the long run, it's a very, very small fraction of people who actually will be successful in the market. Why so many people lose money, that could be a very, very long discussion, but I think I can hit on a couple of things. Lack of a plan is one, and I think that's something we'll talk about. Overconfidence is one of the things that they bring up a lot in academia, which just basically means people think they know more than they actually know. They think they're better than they actually are. It leads them to take silly trades. It leads them to use too much leverage. Leverage really is a killer in foreign exchange. I mean, my research flat out shows the more leverage you use, all things considered, the worse you're going to do. And that's taking into account that forex trading is already negative sum. When you factor in the bid-ask spread and you factor in the fact that there's a bid-ask spread on carry interest as well, it's a negative sum market on the retail side. And so naturally, you're automatically behind the eight ball on average to begin with. So you can't afford to overthink about your own skills. You kind of have to take it as, okay, if I'm getting into this, I know nothing. I'm not good at this. I have to learn and develop, and I can't start jumping in and taking huge trades and using 100-to-1 leverage and expecting things to all go great. The other major thing that comes out of academia, which is something that people will have heard of over and over again in just kind of trading education, is the idea that we don't hold our winners, and when we do hold our losers. In other words, we cut our winners short and we let our losers run when we should be doing the exact opposite. And in academic circles, they call it the disposition effect. It's based on psychology research, which says we humans are much more inclined to feel the pain of losing something than we are the joy of gaining something. So that means if you've already got a profit, the idea of losing that hurts you psychologically a lot more than the idea of making more money.
That's right. Yes, it makes sense. Mm-hmm.
That's exactly why we end up cutting our winners short. And then, the other side of it is, it'll come back, as it becomes wishful thinking. And of course, most times it doesn't come back.
Okay. Now, John.
Yeah.
Okay. Go ahead.
No, go ahead.
Okay. When you were talking earlier, you mentioned CFTC reports and stuff like this, and I'm actually wondering, you think it's fair enough to generalize overall percentage of losers and winners on the forex market, or maybe options or commodity trading? Do you think it's fair enough to generalize the data that because I know the CFTC is an independent US group, that kind of thing. And I'm wondering how their data is going to have any justification on the other traders in the other parts of the world.
From the work that I've done, there isn't a heck of a lot of difference between the US and everywhere else. The data set that I've got, I actually did a side-by-side comparison of those traders and the CFTC traders. And my data set group is slightly better. I mean, in every quarter, they have better profitability rate in terms of number of traders who are profitable for that quarter by a couple of percent. It's not some huge sort of thing. And while the non-US traders are slightly better, it's not some massive gap. So you could probably generalize the figures within a fairly reasonable level of confidence.
But is it statistically accurate enough to make these generalizations? Is that what you think? Yeah.
Yeah, I mean, what I've seen is there, at least for the data set that I have, and obviously you always have to have that sort of caveat. And my data set is broad. It's across the whole world, and it's across something like 50 or 60 different brokers. So there's no sort of bias in that respect. The indication is that the U.S. traders do slightly worse, and it is statistically significant. But they do slightly worse than traders from Europe and Asia. Europe and Asia, there's no real difference between them from the figures that I have. Maybe somebody else's testing will catch something else. But so yeah, the U.S. traders, and this is looking at things in terms of monthly returns.
Mm-hmm.
So slightly worse, not a massive amount. I mean, on average, for retail forex traders lose. My data has it 6% a month.
Oh, okay.
And so, if it's okay, the U.S. traders lose 1% more, or the rest of the world loses 1% less, you're still talking, 5% versus 6 or 6% versus 7. So it's still a big number no matter how you slice it.
Exactly. Okay. Now, when you were citing the reasons for why there's these lot of traders who lose on the forex market, you mentioned about a trading plan, and this might sound a bit of a stupid question, but I actually want you to talk about it a bit. And the question here is, what's the purpose of a trading plan, and why do we need one? I am asking this because I realized that from the beginning, when I started trading forex myself, I realized that it's easier said than done. Yeah, you can say, okay, I need to create a trading plan, but then later you realize that most people are not disciplined enough to actually follow the trading plan. So the first part of the question is, what's the purpose of a trading plan, and why do we need one?
Okay, there's two primary things I would say in terms of the purpose and the value of a trading plan. One you've already kind of touched on in terms of discipline, and that's to have a specific set of methods or techniques or decision points that you use to deal with the variety of situations that come up in the market. Most people will think buy sell rules. Okay, I buy when this crosses that, or I sell when this indicator says reaches this level, or whatever the case may be. And that's certainly an element of it. But a good trading plan also accounts for what is going to happen in the case of high volatility or low volatility. If the market goes here within this time span, this is how I'm going to deal with it. It accounts for whether you're all in at once or you scale in, scale out, changes in what you trade, given market conditions, and all of that should be based on having tested things out and established, as you kind of referenced before with the profitability, a significance, an edge that you can point to and say, okay, I have an edge. I can prove that I have an edge. And this process, or this set of processes, is how I get that edge and how I sustain that edge. The other side of the benefit and the reason for having a trading plan is it keeps you accountable. You know exactly why you performed as you did over a given time period. You can look very simply. Okay, I didn't match. I traded poorly this last month. Let me go back. Let me compare what I did versus what I should have done according to my trading plan. If they don't match up, then there's your problem. You didn't trade your plan. Now, if you did trade your plan and you didn't do well, then you have the next step of question of, okay, was it just a bad market month? Did the plan work as intended? And it was just one of those months where things went against me? Or is there some flaw in the plan? Now, this isn't me saying you need to tweak your plan every other month, because that would be wrong. But you do need to be able to ascertain whether you need to make changes as things go along. And you can't do that if you haven't followed the plan and then been able to use your metrics to make your comparisons. So that's the two sides of it. One is, okay, this is my process. I know this works, and there's a certain level of confidence that goes along with it. And I think that's a problem that people have, is They pick up somebody else's trading plan and try to apply it without ever, learning what it is, getting under the hood, understanding all of that sort of stuff. So one of the things that I really harped on in my book, The Essentials of Trading, was your trading plan has to be your trading plan. You develop your trading plan, what markets you trade, how you trade them, the specific things that you use to trade them, all that sort of stuff, so that as you build it, you're building confidence in it. Whereas if you just try to plug and play with somebody else's trading plan, anytime you get into pressure, it's going to crack and you're going to fail. You're going to stop trading it the way it's intended, and that's one of those why 90% of people fail is they try to use something that isn't specifically shaped for them and it doesn't work, and because they don't follow it, then they can't properly address the metrics to see what's working, what's not working, and so they end up back at square one and then probably go chasing off some other system or whatever.
Okay, that's sensible enough. And then we in the when I go around answering questions and reading stuff on people's blogs and forums and stuff like this, I come across this quite famous question that goes like this: what's the difference actually between a trading system and a trading strategy? I wanted also to ask how can one develop a trading system and how can one develop a trading strategy, and which one of the two is a subset of the other? What would you say, John?
I would personally, and this is probably something that's going to vary from person to person a little bit anyway, I would personally say a trading system is the specific set of rules that you apply that determine when you get in and out of the market. Whereas a trading strategy is kind of more an overarching philosophy toward trading. So to your point about which is the subset of which, I would say the system is a subset of the strategy. How you develop both, and this goes back to the idea of the trading plan, is you obviously, from my definition anyway, you're starting with looking at trading strategy and considering things like time frame. At what time frame works for you? And that has to do with lifestyle and job and, kids and family and all these other things that are constraints on your time. What market do you trade? Obviously, here we're talking about forex, and we can say, okay, you choose forex, and then you may want to go further and what specifically within forex do you trade? How do you trade? Are you fundamentally oriented? Are you news oriented? Are you technical trader? All those sorts of things that will feed into your trading system. So that's where that kind of we're working top down here. And for me, trading strategy and trading plan are in a lot of ways relatively synonymous because they basically drive from the same sort of personal assessment needs. Figure out where you're at, figure out where your funding is, how you work best in the market, how you work best dealing with information, and all that stuff. That works into your trading strategy. And then once you have that, you could say, okay, how do I take this and apply that in a way that makes sense to develop a system which I can then tackle the market with.
Okay, and when you were talking about the trading system, you mentioned that it involves actually when one gets in and out of a trade. How do you personally get into a trade, and how do you get out? What do you look out for?
My trading style, or maybe we could take to say trading strategy, tends to be mostly momentum / breakout oriented. At least that's kind of been my history.
Okay.
So I don't use much in the way of indicators. I will kind of take a look at volatility, and I look for situations where volatility has gotten low and it's in a good position to start expanding again. And if I see a good opportunity to catch what hopefully is the beginning of a new trend, that's kind of the way I approach things.
It's actually very funny how this kind of trading style, is common among the few people that I've been speaking during the past couple of months, because I met someone who said he was also trading breakouts, but he said he was solely relying on NFPs and such fundamental news and stuff like this, and then he was applying that kind of triangle kind of technical analysis and checking if stuff are symmetrical and stuff like this. But it's I'm very surprised to hear that you are one of these people who actually trade momentum and look out for breakouts. Well, okay. I think we'll go on to the next question, and it's like this: what are some of the characteristics of pro forex traders, and how can beginners or intermediate traders get to the level of the professional forex traders?
I think it comes down to one thing, and that's consistency. If you're a professional, and this applies to basically anything in life, any career, anything that you're going to approach, consistency is what differentiates a professional from others. The pro knows I have an edge. I profit by applying that edge as much as I possibly can. The non-pro thinks they have an edge, maybe. Sometimes they apply it, sometimes they don't. They're all over the place, they're inconsistent. So to get from being a beginner and intermediate to being a professional is about developing. Obviously, you got to find the strategy / system that gives you the edge, but it's then about developing the ability to use it over and over and over again, and not go chasing after, well, hey, this is a really interesting chart pattern, even though it has nothing to do with my trading system. And then finding yourself in a hole, or I really like the way the market's set up right here. I'm going to double my position sizes. Whoops. Then the market goes the other direction. So professionals understand really, really well the probability side of things. That any given trade is a winner or a loser, and that you're working for long run results. Okay. Law of large numbers. That's basically what a professional is doing. They're putting the law of large numbers to their advantage. Okay. By applying the edge that they've got as much as they possibly can. And the reality of the situation is, and a lot of people aren't going to want to hear this, but it takes years. It can literally take years to get to the point of being good enough to profit consistently. And I think the research that I've done is I've got this data set where people have said how much experience they have. And it's 0 to 1 year, 1 to 3 years, 3 to 5 years, 5 years and above. And there's a break at that 3-year point. People with 3 years or better experience that they've indicated are statistically better than the people with less. Mm-hmm. It's kind of a rough thing because it's based on, just like profile data. So it's not super precise, but at least it gives you an idea that, hey, you got to be in this for a couple of years before you should expect results. And that said, even then, it wasn't like they went from being losers to being winners. It was just they were realistically, they were just losing a few % less every month.
Exactly. That makes sense. And okay, that's enough about the professional forex trading stuff. And we have this next question. This question is actually very, very important to me, and I would like to have your views on this because I spoke about this same thing with Alex Boyd from Poseidon FX, PoseidonFX.com, and I would like to also hear your views on this. So I'm very interested. It's about the current situation in Greece. I think you know about what's going on in Greece and stuff like this. Mm-hmm. And I would like to ask how much you think this is going to affect the euro, and what are your predictions?
Honestly, I think in the long run, there's probably a lot of noise, and that won't end up, resolving into anything too dramatic. We've been through this before, and repeatedly, not just with Greece, but with others as well, where they get to the brink and something happens. The deal is cut. The reality of the situation is if Greece goes out of the euro, that's it's going to hurt Greece a lot. Because any debts that they have, any external debts that they have that are denominated in euro, they're just going to explode, because you have to expect, if, assuming they return to a drachma as their currency, that there's going to be a drachma devaluation relative to the euro, and all those people who are have euro denominated debts are just going to get crushed, which is something we've seen in Eastern Europe, with those who have had, I think, places like Hungary, they've got debts like mortgages that they took out in Swiss francs. And when the Swiss franc exploded, that exploded the level of debt those people have. That's a killer. Mm-hmm. It's an absolute killer. On top of that, I mean, and that would just be one potential outcome. I mean, Greece isn't a huge trade country to begin with, so it's not like having their own currency is going to make a huge difference from that perspective. Okay, yeah, there is the tourism trade, but it's not the same as like capital goods and things like that going across borders. The cost of systems and all these sorts of things changing over again would be considerable. I mean, they have to do a lot. So the odds are, for me, against an exit. And I recently saw somebody say if Greece exits the euro, it's going to destroy the single currency. I can't see how that can be the case.
Well, but then they still have this big amount of debt to clear up, and for me, I think the logical thing is actually to stay. But then how is this going to affect them later, and how do you think they'll be able to get over this?
Well, I mean, it's the same with any situation where you get yourself into a financial bind. There tends not to be any quick solutions. You just kind of have to grind your way out. And it's tough choices, and obviously everybody hates tough choices. Nobody wants to be the one that has to sacrifice, but the reality is everybody's going to end up having to sacrifice. It's something that's it's not going to get fixed right away. It's they just have to make good decisions, not overreact, and just steady progress. It's like learning. It's just, bit by bit, and it would be the same thing as if it were you or me being in debt and in a bad financial situation. Is unless somebody gives us a lot of money, which I don't think either one of us would expect to happen, we just have to, put a little bit aside every month, pay the debts down little by little, gradually, and eventually, over time, things get better. But it's a slow, painful, tedious, monotonous process. And that's the thing nobody wants to hear. Everybody wants the quick fix, and it just doesn't work that way. When you create that kind of damage, it takes an equally long period of time to reel it all back in.
Okay. Well, I wish them all the best, and then I hope they really get out of this. Okay, listeners, I'm talking to John Forman, who is a trader, analyst, and author of The Essentials of Trading. You can find his book on his one of his websites, theessentialsoftrading.com, and he's currently with me online, and I'm asking him a couple of questions that I believe he's answering lots of questions out there. And John, the next question is like this: I actually wanted to ask you. This is sort of personal. Do you currently trade the forex market? I mean, as at now, as we speak, do you trade forex?
Only a little bit here and there right now, just because of the situation I'm in, doing my degree and not really being, not having that steady income of working and things like that. So I've made a decision to be very conservative from a financial perspective. I've traded a little bit here and there, but not not nearly as active as I've done in the past. once I get done, once I get back to work, then I'll get back into it again.
Okay, so I understand. I understand. I can interpret this as you're not an active forex trader.
Not at the moment, no.
Not at the moment. Okay, but after the PhD stuff, you're going to get back for sure.
I would expect so, yeah.
Oh, okay. And I have this question. Well, it doesn't really matter anyway. But then I wanted to ask, if you had to change something now concerning your trading style, if you compare how you were trading earlier, some years back, if you had to change something now, what would you change?
A lot of the way that I trade now, I more or less already developed by the time I started trading forex, because I had traded stocks for a number of years before that. But the one thing that I would do is slow myself down at points, because I did have a tendency to overtrade, and by that I mean too frequently. I would finish one trade and I'd be immediately looking for the next trade instead of taking a breath, taking some time, being patient, and looking for a good situation. I know that I know I can go on really good runs at times, but I also know that inevitably the back end of that is bad runs. And I would tell my younger self, okay, slow down, just look for good setups. You don't have to make all the money right now. There's always going to be another trade coming.
You have to forget about the greed, because lots of traders are really, really very greedy, especially when they are starting.
Yeah, and especially, and one of the problems that a lot of traders have is, they start off with a small account. Maybe they trade $100 or $1,000. And when you're trading at that level, the size of your wins and losses don't seem very big in nominal terms. If you lose $10 on $100 account, it's like, oh, $10 is not a big deal, but it's 10%.
Exactly.
And if you kind of stay in the habit of thinking about it, oh, it's only $10, it's only $20, then you develop a lot of bad habits with your trading. And you're going to tend to overtrade because you want to make the big money. You want to double your account or make 50% or whatever, which means you take relatively stupid risk. And, usually that's how we blow up accounts.
So how did people like George Soros actually cause the Black Wednesday? How was he able to break the Bank of England, as people say? And how did he find the opportunities? How was he able to see things that other people didn't see?
The funny thing is, I used to work with a guy who was actually kind of involved in the markets at that point. And he said repeatedly that Soros actually didn't make the bulk of his money in Forex. He actually made it in the money markets, trading like short sterling and that sort of thing. That's where he made his killing. He made a little bit in Forex too. So the idea that that everybody says is, oh, he made this massive thing trading against the pound is not actually right. But I struggle with the idea of accepting that Soros or anybody else broke a central bank. He was just operating based on his perception of the reality of the situation that, the Bank of England was trying to fight against. Kind of like the Swiss bank. The Swiss National Bank was trying to fight against these last year. The Bank of England was looking to keep the pound in a trading band that was just fundamentally not sustainable. Soros saw that, or at least he interpreted things as in that fashion, and said, okay, inevitably they're going to have to let it go. So it's not that he forced the central bank's hand; he just coattailed the inevitable conclusion to a situation that had been building. And he obviously did very well on it. And one of the things that I've read him talk about in terms of why he's had some of those big winners is that he's not afraid to pile on a position to really ratchet it up when he sees that it's working. Mm-hmm. So, unlike most of us who we put on a position and it's that size and we trade that size, and when it's over, it's done. He'll put on a position, and if it goes in his direction, he'll keep adding to it as long as he sees the foundation of that trade as retaining its consistency.
Okay. Okay. Now I know a bit more about George Soros because actually there are lots of articles around, even on Wikipedia, that has some kind of information that I've actually doubted a bit, but I think you've cleared some things up, and I'm very very grateful. Now, John Forman, I know you have a book with the title "Trading FAQs." Is that right?
Yeah. Yes. Yes.
Can you tell us about this book?
Basically, it's something that I did a couple years ago, where after seeing the same set of questions being asked over and over and over again, either to myself through my website or on trading forums and things like that, I said, okay, let me collect all these questions and let me put them in a place where they can be answered kind of in one central resource rather than people having to search and hunt all over the place to try to find them. And let me get a bunch of different perspectives on these things, because some of them were not very straightforward. Some of them were, but some of them could, the answer could depend on, how which market you traded or your style of trading. So I brought together about a dozen, maybe 15 different money managers, professional traders, market professionals, people who had started off as little individual traders and got to the point where they could trade for a living and things like that, and said, okay, here's the questions. Pick whichever ones that interest you, answer them. And I compiled them all together. I didn't really edit anybody's responses other than maybe for spelling or grammar or something like that. And so what the book ended up being was you got about 50 questions answered by all these people with, literally centuries worth of experience in the markets. Mm-hmm. So it's a lot of kind of really interesting ideas and recommendations, and just the book recommendations in there alone is probably worth just
I'm
giving it a read.
Thinking having people answer some of these questions, especially from the pros, is very a very valuable source of information for people interested in knowing the answers to these kind of questions. And I'm actually on the website of your book, and I see really interesting questions like what people should trade. Is forex a scam? How much money do I need to start trading? You have answers to all of these questions by the pros in this book, right?
Exactly.
Okay, I should be getting this book myself, and I'm really very interested in what's the people you've interviewed and what's you've gathered as answers. And how much is this book?
I think it's available on trade2win.com. So that's trade the number 2 and then win.com. I think right now it's priced at $19.99, and if you get it, there's a packet of interviews that I did with I think 6 or 7 of the contributors. One of them is a broker. One of them is a former money manager. There are others, traders, a couple of traders that I talked about who kind of ran up a small account to being able to trade for a living. So it's kind of a cross section of the contributors to the book. And so there was, each of them runs about an hour. So some really good, interesting conversations that I remember having.
That's a lot for $19.99 USD.
Yeah, it's not too bad.
And do you don't have this on Amazon? No,
not yet. I need to talk with Paul, who runs Trade to Win. We're aiming in that direction to try to get it there. It's just that with my PhD stuff, it's kind of been on the back burner.
Okay, but then I can pay by maybe credit card or by PayPal through trade2win.com. Right?
Yeah, exactly.
Oh, okay. That's I shouldn't have a problem getting myself a copy.
No.
Okay, I'm really very grateful, and I'm really very happy, first of all, and I'm very thankful that you made time to talk with me and help answer some of these questions for people out there. And before I let you go, I would like to ask if you have any final words for for beginner traders, especially because I'm more interested in beginner traders because they account for the bulk of the people who lose money on the forex market. So if we are able, of course, we can get everyone to win, but then if you are able to help or increase the percentage of the people who are winning as forex traders, then I think it would be very, very awesome. So before you go, I would like you to give your best advice you could ever give. I mean, the best advice you could ever give to beginner forex traders.
I would say two things. First, be patient. Like we talked about, it takes a while. It's not going to happen overnight. So be patient in terms of letting yourself develop as a trader and letting yourself learn. And the other thing is do it your own way. Your own way. And that's going back to what I talked about earlier about developing your own trading plan, your own strategy, so that everything that you do is really suited to your own personality, your own life situation, and not somebody else's. Because as I said, if you try to use somebody else's work, then you're going to end up jumping from system to system to system, and it's not going to. You're just going to end up spending money you don't need to spend, losing money in the market. That's the big killer for so many beginner traders. So be patient and do it yourself.
Okay, thank you very much, John Forman. That'll be it for today, and I'm looking forward to talking with you some other time.
Hey, glad to do it.
Okay, thank you very much, and have a nice day.
You too.
Okay.